Namfisa's role is as per the establishing act, which is the Namfisa Act of 2001. And in terms of that act, Namfisa is mandated to supervise financial institutions and their business thereof. And these are financial institutions that are not banks, which means they are anything that is not bank that is supervised by Namfisa. Also, Namfisa need to advise the Minister of Finance on matters relating to financial institutions and their business thereof. Later in the years, when issues relating to anti-money laundering became an issue, that was an added mandate to Namfisa that we look at enforcing the FIA Act, the Financial Intelligence Act, with respect to reporting and accountable institutions that we falls under our regulatory ambit. And we do that through various acts that we administer in terms of each specific sector, say for example, insurance, medical aid, pension funds, stock exchanges, collective investment schemes, and so forth. So it's quite a huge mandate. In terms of supervision, it has become important that conduct supervision, it's imperative, and that's where treating customer fairly comes in. And with this development in the context of the financial system around the globe, we have looked at reviewing our establishing act, reviewing the acts that regulate financial institutions, and conduct supervision has become part and parcel of that revision. The World Bank and IMF normally undertakes missions into different countries to assess the financial sector, and they will point out what are the gaps that you have in your legislation, in the manner in which you do your supervision, and also our own experiences in country has led to us to undertake the reforms, and these reforms is the one that culminated into the revision of all the laws that we administer. And now all the laws that we administer that has been will be repealed are now contained in the act that is called Financial Institution and Markets Act of 2021. So that's where this reform emanated from. It was an overhaul of all the industry that we regulate, not only the insurance. We regulate pension funds, and the act that is in force currently is very archaic. It came into force in 1956. You can imagine the financial system have evolved, and similarly to the Insurance Act, it's also a little bit old, and it needed some revision. The act that relates to unit trust, act that relates to stock exchanges. So the financial system have evolved, and you can imagine the Namibian non-banking financial services. It's somehow, I would fairly say, it is developed to some extent, and therefore, for us to be able to compete on equal footing with other jurisdictions, then we need to guard against regulatory arbitrages so that we include the latest thinking within the supervision and the regulation of the financial sector. Sure, that's correct. The enforcement powers had somewhat improved so that we can take certain remedial measures against the non-compliant industry players. We specifically stated that we need to issue a subordinate legislation regarding plain language when it comes to contracts. And that is one of critical standards that we will issue, so that the language in the contract should be in plain language, other than to be in such legalistic language where an ordinary man would not be able to understand. In terms of our plan, is that given that the new law, it is principle based, and also it requires some subordinate legislation that should be issued by the Minister of Finance, some to be the standards to be issued by Namfisa. And the law specifically says that the issuance of subordinate legislation, we need to consult with the industry. And once those consultations are finalized, then is when we'll be able to issue the subordinate legislation and we'll bring into force the new act. And we envisage that this process will probably take around 9 to 12 months. But if the consultation will be much quicker, and that it will be to the benefit of the industry and the public at large. If you look at the new law, like any other regulator in this world, we belong to international standard setting bodies, which are setting out standards, like the standard that can be set out for insurance supervisors, for securities markets, for pension funds. So they give principles in terms of what needs to be done by a regulator and how you can regulate and supervise industry. So our law conforms to those principles, and with those principles that we conform to, it's robust, and the issue of consumer protection is clearly codified in the law, that is part of our objective and mandate. Yeah, my message to the insurance industry is quite simple, and that is the message to all the regulated entities, that when they enter into contractual obligation, and the settlement of those contractual obligations should be done timeously, and customers should be treated fairly at all times, so that the confidence in the financial system is not eroded. So our stance is quite clear. If you have an obligation, please honor the obligation in terms of the contracts that is in place. We discussed with the industry in terms of what relief measures that they would be able to give to the industry. And with that, we communicated to the industry and said, please, this is what you can do when your clients approach you for some of those reliefs. Uh, in terms of complaints that reached the authority, were only two complaints that were related to claims on insurance with regard to business disruption. And one of the complaints, when we looked at it, we found that the insurer was correct in terms of what were the included in the policy contract, and therefore the repudiation of that claim was in line with the contract. And the other one which we received, which was the delayed taking action in terms of whether to pay the claim or to decline the claim, was brought to our attention. As we were busy investigating, the parties resorted to courts of law. And you could imagine, as the regulator, you wouldn't want to meddle in matters that are before courts. And with that, we advised them that we are unable to proceed given that the matter is before the court. So it is sub judice for us. We followed the development in the UK, the development in South Africa with keen interest. And these are 2-3 separate jurisdictions, and also the police contracts might not be the same. Namfisa is a creature of statute, and therefore it is an administrative body, and therefore whatever it does should be contained in the statute. Otherwise, myself as the registrar, I'll be challenged in terms of either the directive that I will issue or whatever stance that I take. Therefore, our stance was based on what the law can provide so that we are able to enforce what the law says. So I subscribe to the notion of justice delayed is justice denied, and therefore it goes two ways, from the insured and the insurer. The insured, when getting into a contractual obligation, they must make sure that the events that they want to be insured are the events that are insured and are in terms of their policy. Otherwise, then at the time of claim, when a policy is brought to them and say, look, this is what you signed for, it's contrary to what you had in mind. And therefore, it's important that the insured also look at the contracts and say, this is what I really need. And if it's not what you really need, then you're at liberty of moving out of the contract. And on the part of the insurer also, which is clear, is that when they have entered into an insurance policy, they must honor it. There's no two ways about it. So if they deliberately just delay that, and if we pick it up that this is the deliberate issue of delaying, surely we will act in terms of what the law provides for us to act in terms of that. In the Committee of Financial Stability, what we discussed there is the issues relating to is the industry stable, sound and safe. And we have found that when we reviewed and we assessed the financial sector, we found that really it was sound and safe, especially the non-banking sector where I exercise oversight. My thoughts on that is that the obligation is between the insured and the insurer. And the relationship between the insurer and the reinsurer it shouldn't affect the obligation in my view. And therefore, if the insured event occurs, the insurer must ensure that the obligation is discharged, and that's what they need to do. So it's when they enter into the insurance obligation, the insurer had the choice to say, can I underwrite this risk? And if they say I can underwrite it, then it means they are able to honor that obligation. And in some instances when they feel that, oh, I can underwrite, but also let me share this risk with the reinsurer, that is their own risk management that they are doing. But the obligation still remains between them and the insured. I think that it's important that the resources that are in country can be enjoyed by the citizens of the country. And that's the premise where I think it is important. And just as a little example, if an insurer is fully owned by a shareholder who's the non-Namibian, whatever profits that comes out of that insurance business will be shipped out of the country. And unless if the shareholder decides to reinvest some in country. So you can imagine that the country cannot reap the full benefit of the resources that is available in country. So in my view, there should be some form of dilution in terms of shareholding, and so that everybody can benefit from the resources that are in country. Although this has not been codified in law, however, it's a good thing to do. I know government is working on legislation that will look at the issue of ownership, and I think it premised from that desire of seeing that the citizens of this country can also participate in the mainstream of the economy. It's interesting because we live in an economy where capitalism is practiced, and mostly capitalists would want to maximize on their profit, maximize on their returns in their investments. However, is it sustainable? That is the question that we need to ask ourselves. How have we empowered the locals in terms of the investment? So those are the questions that we need to ask ourselves, whether it is desirable and will it be sustainable. It's important for the men in the streets that the institutional investments, the money that comes in countries through contractual savings of the policyholders, can be utilized in this economy so that it can create jobs, can create wealth, other than shipping the money outside where the money will go and work for somebody else. The broker should work for the client so that they can find best deals for the clients. And therefore, the broker will go out there and shop around and say, in terms of your needs, I think the better insurer is A, not B. And that's what they need to do. So in terms of their relationship with the insurer, they shouldn't be attached to any insurer. So they are unlike insurance agents, because the agents works for the insurer, but the brokers should work for the clients of the insurer so that they can get the better deal. It's interesting, and therefore you'll find that in the Insurance Act there's issues of undesirable practice. The broker should ensure that they service their clients properly. And there were instances where in the past where we stopped some of these undesirable practices, where a broker is taken by an insurer for expensive trips. So in the end, they might be able to be influenced. So some of those practices we took a stance and we said this is undesirable practice, therefore this shouldn't happen. The insurer should ensure that it's able to have enough capital and buffer to be able to honor the claims. So it's not our stance to tell insurer that do not honor because you will go under. That's not the case. So I can dismiss that one. The changes to the police contract should not be done unilaterally, and that should be done in consultation with the policyholder. And most contracts have a duration, and when they are being renewed, it shouldn't be a unilateral thing that an insurer just goes and changes the policy, because it might not meet the needs of the insured. So this should be done. The new terms, those should be understood by the insured, so that the insured can make an informed decision whether they need to go on with the new terms and conditions. If not, then they can walk away and look at a different insurer altogether. So it shouldn't be a unilateral thing. What the pressing issue for me is that the economy has not been doing well for some time. How are we able to resuscitate the economy so that it can create sustainable jobs? And if this happens, this will lead into new businesses for insurers, new businesses for entities that are within our regulatory sphere. So it's important that we reconfigure the economy so that it can generate wealth and create employment. Whenever they have any complaint against an institution that is regulated by Namfisa, they should reach out to us, either by phone, through our website, or the channels that are available.